is. I don't know why it's not working, but in here, but YouTube room, it's working now. So what we were saying is there's a lot of global instability, which to me means, yeah, you need to sit there and sell rallies until proven otherwise. So I want to show you some of the charts we use. Number one, we have been using this one. So we have been using this, a six multiple futures charts. We color them. So if they're under the ATR trailing stop, they turn red. So if they're over, they turn green. Like I said, there's a lot of global instability at the moment. So we know that. So, and there's a number of other things you have to take into account. So what are some of the other things we're taking into account? One of them is overbought. We use a MACD a lot, a 31016 MACD. When the MACD is overbought and the hourly still looks dicey, you have to look for your short trigger. So that's what we were doing this morning, and that's what we did successfully, and we're going to continue doing it. So keep that in mind. So like I said, global instability. You got to watch out for that. In fact, chart patterns mastery, we have that apple butterfly on. So far, so good about playing to 235, even though the stocks acted great. Just keep that in mind. So give me 1 second. I'm trying to manage these positions for you. So I got to see where they are. Yeah, any lower in here, and we're going to have to take a profit in that XSP we did, just to let you know. So I will let you know. So we're in this. So we're in the XSP, betting on it being over 277.5. Getting a little nervous here. So chart patterns master, I know you've tuned in here. We're going to have to look at, if we could get out at $1.80, we got to be nervous in here. Got to be nervous because the market could overshoot. It's not 204. I wish it was 205. Yeah, it's probably unchanged because we're going down too fast. So I'm going to try to stick in. But remember, we're short Apple via a butterfly under the market. So, but big picture, let's go back over it. Here's the ES on multiple time frames. Right now, we're watching this. Number one, the German bond. That's a big, big problem for the broad markets because it's instability. That means that if the Russell rallies, you don't look to buy it. You can't buy strength in this type of market. You can't buy strength with that type of chart. That could overshoot to the downside. Just keep that in mind. So this could be a bear flag. So then you come down to the next thing. Here is the Russell. Yeah, we showed a short right here. Right there, actually. And I'll show you how we did that also. But the first thing you want to know is this. Is when you see this chart, this is the NASDAQ 100, how are individual NASDAQ stocks acting? Well, I'll show you. Go and put up a 5-minute chart of all the ones you know and love. Is that a bull flag? Is that a bull flag? Is that a bull flag? No. They all look like bear flags. If they do break, then this could have another leg down. So keep in mind the hourly chart looks like that. Not beautiful. Now, if the Russell gets up for the day, maybe this gets invalidated. We've been keen off the growth worries as reflected in the E-mini Russell, in the Russell. If the Russell sells off, then it's more likely that NASDAQ's going to sell off. So just keep that in the back of your mind. So, I mean, that's what we're watching. So, on the one hand, you have, yeah, the markets are overdone. I understand all that. But in a bear market, you could go down more than you ever imagined. But I would use Trading View and I would look at the Bund futures. And when you see it not bounce, that's a sign of instability. So when it bounced, yeah, the market's bounced. So just want to show you that. So that means that butterfly and Apple, you're okay right now, believe it or not. So the Apple butterfly, you're short. So far, so good. So we now, believe it or not, we want to rally. So I'm going to show you something else. We did this morning. This is a paper trade, but I want to show you on how we did it. So all we did in here is we took support and resistance this morning. See the resistance? But there was more right here. Do you see this trend line? Right there. So I want to show you what we did. It's a paper trade, but some of you actually did it because the point is that a lot of people wanted me to show initiation and why we did it. So I'll show you. Number one, you're taking a 1 minute. You only want to use a 20 and an ATR trailing stop. Number two, when there's global instability, do not buy out of the money SPX calls. That's stupid. Sorry. I know there are a lot of sites on the internet that do it. There's too much global instability to buy out of the money calls when you see that German bonds doing that. So just keep that in mind. All right, so let's go into this so you know what we're talking about. We're going to take off the 200. We're going to put the 20 and the ATR trailing stop. That's it. We can put the 9 also for good measure. And let me show you what we're talking about. So we did this morning. This morning. So we watched this trend line. Do you see the trend line? The more times you can connect the lines, the more important. Do you see that? So when it crossed the ATR trailing stop, I shorted it. So then where do you get out? Well, the first thing is a lot of times when it gets too far from the 9, it's a buy. Or let's put it this way, you buy back half. You buy back half. That's reasonable. So when we shorted here, when this candle got higher than this candle, we bought back half. See the arrow? Then when it got over the ATR trailing stop right here, we got stopped on the rest. So just keep that in mind. So when you go over the actual trades in here, you're going to see you shorted it here. You bought it and made $800. So you shorted at that arrow I showed you up here. You bought it here. You bought one. Sort of a financial decision. You bought one. So then the other one I got stopped. You made 300. So all of a sudden at 2 lot, you made $1,200 by initiating correctly. Did you buy on the way up? Well, you could have here, but we didn't. That's because there's too much global instability. Now, I'll tell you though, the problem with the German Bund is this closes early. So is this right now? Yeah, it's had a little bit of a rally. So it closes, what is it, Penn, 12:30 Eastern? But still in the grand scheme of things, this is pretty ugly. So if this bear flag is not invalidated, so if it doesn't get up to here, you got to think U.S. markets aren't going to rally today much. So, and like I said, when that happens, you do not chase an overbought 15-minute chart when there's too much global instability. So keep that in mind. In fact, now I'm nervous about the XSP we have on. The problem is you don't want to go and sell an out of the money call because what happens if something changes? You know, like the tariff stuff yesterday. But let me show you. Let's go and do this. This is paper trading. All right. I have a tough time shorting at support. So in the next hour, if this consolidates right in here, then I'm going to do a paper trade and sell an ES. In fact, I could sell one now and have a stop here, tight stop, like 4 points. But I don't want to do it here. It's at support. Not yet. Not yet. So I'm better at shorting on trend line breaks or bear flags. If I just short because it's at, I think it's going down, that think will get me in trouble. If I ever do that, it has to have an ultra tight stop. I don't have enough reasons other than global instability. Well, there it goes. Okay. You want to sell on the way down? Go and sell one on the way down. There you go. So where's your stop? Your stop is going to be up here. So I'm risking like, 5 points. It's not enough reasons at the moment. Not enough reasons. So I usually put a stop up here. 4-point stop. I can deal with that. So that's what I'm doing. Like I said, that's paper trading, but it gives you sort of an idea of what I'm watching. So just keep that in mind. So right now, what do? Well, I'll show you. So right now, I did that. I showed you what I did. Where's my stop? My stop's at the top of this candle. See that? Stop's at the top of this candle. Like I said, global instability. So now you're up $300. I shorted on the break. I also shorted when this candle was lower than 2 candles prior. You see that? That way you have a backstop. So now you go in and you put a stop because now you're playing with house money. So now you put a stop up at this area. Let's put it here. 57.87 right here. So you put a stop up here. 58, let's say 88. That's our stop. Buy stop. Buy stop. 57.88. Because heck, you never know if something comes out good about even more about tariffs. So all you're doing in here is you're shorting on that candle break and you're putting your stop up here at the top of those candles. That's all you're doing. No more, no less. And as you see, so far, it's been pretty successful. What else are you noticing? The things that made it go down earlier still aren't going up. The JP Morgans, the Visas, they're still not going up. So not bad. So like I showed you, I don't think that's bad. So just to let you know, we're still in that put fly. Just keep that in mind. We're in that put fly in Apple. So now, what would change my mind? The first thing that would change my mind is if the things that made it go down, like the JP Morgans, or you go to a different, my main list. If you see the Metas, the Amazons, them having a strong bounce, sure enough, I'd start to think, well, we're going to stop. We haven't stopped yet. So we haven't stopped yet. But I just want to show you that about what we're doing. Now, chart patterns mastery, that XSP is only 55 cents in the money. We have to root for a rally or we're going to lose $1.50. So I got to decide real quick what we're going to do. I don't need this aggravation. On the other hand, Apple, yeah, you're up in that. So that's where we are right now. I haven't decided what I'm going to do in XSP. I'll let you know when I do it. In fact, XSP, I'm going to take a loss. Going to take a 20-cent loss. I put that in there. I got to go into it and tell you. Like I said, global instability. That's what you're seeing. I can always do this later. Just keep that in mind. I can always go back and do this. So there, I had to go log in. I'm not, it's not that easy to dual broadcast, just so you know. So just keep that in mind. So what am I doing? I shorted like I said, this is paper trading, but it gets the point across. What happened? You're up 500 bucks. You shorted on the candle that was lower than two previous. Well, now what happens if you rally? Where's your order? Well, number one, I've been keying off the Russell. So if the Russell gets over this 9 EMA, see that? That's your first warning sign that maybe you need to tighten your stop. See that? That would be here, locking in the money. If I had two, I would have bought back one now. So just keep that in mind in there. So right now, still short. Still short. So where do you buy it back? Well, number one, if the Russell rallies. Number two, where is the major support? Well, if it doesn't hold here, you don't have a lot of major support. It could go down another 30. So I'm still short one. You're up 900 bucks now on a one lot. You shorted on the way down. It seems like nobody knows how to do that. I just showed you how to do it. The candle was lower than this candle. You had global instability, and the thing that made you go up a minute ago went down, which is the Russell. So now you might say, why don't you put your stop up here, just in case there's tariff news? That's a good idea. Right here, you're locking in your profit. Now, a lot of times it goes above it temporarily. So I could do that. But for now, I'm just staying in. But how close is the Russell to support? That's what you want to know. So let's see. That or to that moving average. It's only 2 away. So ES, sure, lower your stop to right here. That way you're locking in your money. Your stop is right here at that moving average. If I had a 2 lot, I'd be out of 1 right now. So I'm still short. Now, where's your objective? Where's your objective? Your objective is either the break. Everybody always asks, what's your objective? You know, what's your objective? Well, the first objective is to put in a stop if it starts going up. Everybody gets that wrong. What is your objective? Your first objective is to protect your position. So keep that in mind. All right, your second objective is what is the objective just in case. So let's go into it and I'll show you. So go into here and now forget about all that. And what is your 15-minute objective? Right here, the test of the low. On the other hand, where's the Russell in relation to that? It's up here. So today, the ES is acting worse than the Russell. The Russell was down here. The ES is already there. So if the Russell gets back to here, the ES is probably going to undercut. For once, the ES is actually underperforming. So just keep that in mind. How about an hourly chart? That is not the prettiest chart in the world. Now, if it's a miracle and this gets over that, sure, then the ES will probably go up. But, and this is a big but, if it doesn't, you're talking about this going down by this amount. At the minimum, that amount. That's about 70 points more. 70 points. So just keep that in the back of your mind. 70 points. So how about the NASDAQ? Well, it better hold here. These are all the trades I did in our chart patterns mastery paper trades. We did those. Bear flag, you short it. Bull flag, you look to buy it. Don't make it harder than it has to be. Do you see this right here? Yep. Guess what? If you shorted here and you were stubborn and you gave up, once it took back half the green candle, you reshort it. Now you might say, yeah, but it's 50 points lower. Heck yeah, it's 50 points lower. But on the other hand, the direction is known. You're in such a volatile market. Who cares if it's 50 points lower? So just to let you know, if you go in and put, just so you know, if you go into here and you promote your Facebook page, guess what? You're getting blocked in here. So you're not going to be in here. I just want to make that clear. You're not going to be in here if you post your link to your site. Just keep that in mind. This is about not promotion of other sites. So keep that in mind. All right. So the ES is down 80. Does that tell you anything? No. If the Russell invalidates this, yeah, then, the ES will probably have a nice rally. You see my buy stop. On the other hand, if you take a 4-hour chart, this better hold. So that's where we are at the moment. Like I said, what would change my opinion? Well, number one, I don't have an opinion. I'm just going on what the charts are telling me. Like I said, there aren't many sites that show you bear flags and how to trade them. I just showed you a bear flag and how to trade it. I initiated, though, because of a 4-hour bear flag, but I was comfortable to short on the candle that was lower than 2 previous. Now gets dicey because you might have a candle higher than 2 previous. But I better see the things that made the NASDAQ go down start to act better. That's a bear flag. Nobody believed that one. Amazon. That's a bear flag. Tesla. That's just a crap stock. And Apple just got pulled down with everything else. So that's where we are. Like I said, I am now playing with the house's money. One of the keys in this business is proper initiation. So if you want to buy here and you want to buy on the way down, fine, go for it. Where do we buy? We buy on trendline breaks. So just keep that in mind. On the way down, we short. On the way up, we buy. Trendline breaks. Did you have them the day before? Yeah, I was at lunch, but here you go. There is a bull flag. If you bought on the way down up here, it took all day to make it back. This is, 2 hours. That's in the middle of the night. But just keep in mind, we buy when you see that. Because heck, you don't know when it's going to stop going down. What do I mean by that? Like now. Look at that. Now you're up $1,300 on a one lot. So just keep that in mind in there. You're up $1,300 on a one lot. Now, if I had a two lot and it's this far from the 9 and now you're at this area of support, yeah, I probably would buy it back. That's always the tough part. You need to identify your support and resistance. Right now, you're at support. So guess what? Yeah, I'm putting my buy stop here now. Yeah, locking in 13 points if I get filled. So you see the support back here. That's the good news. So what's the bad news? The bad news, I mean, if you want to buy, the bad news is on an hourly chart, you're just starting to break down. So we're still short. Just keep that in mind. If I had two, I'd buy one at support. So as you see, NASDAQ, ES still getting hit. Why on earth would I get out? So let's go back to it. I hope you're liking this. And B Car, I hope you shorted. Jack, I hope you shorted. I'm trying to show the entries on arrows. Now, this is a paper trade, but it's giving you the right technique. So I hope everybody's seeing the right technique. The right technique is to short on the way down, not buy on the way down. In an unstable market, you do not buy out of the money calls. You know, you got bailed out yesterday. That's fine. But when you see what just happened with this, you got lucky yesterday. And like I said, maybe 80% of the time you make money, but that 20% you're gone. That's why 90 to 95% of traders lose money, because they don't initiate correctly. And this time you did it for real, Jack. Oh, that means you're going to be wrong. No, just kidding. We talk all the time about paper trades, but look at that. So now do we tighten our stop? So let me show you. So Jack, you did it as real money. Good job. Now go to a 6 period. What's the 6 period show you? It shows you that could be a bear flag. Why on earth do you buy if it's overbought when this might be a bear flag? Now, I know we did an XSP and lost money, but guess what? We made an apple. So that's where we are. And we didn't screw around with anything else. So look what's going on. So now you're up a lot. And I'm so glad so many of you actually did this trade. That's very exciting. Very exciting. So let's go back to it. So you do a one lot, you're up $1,700. Wow. If you did a two lot, you probably get out of half. But boy, this really saved your butt from going in buying. You don't buy on the way down in global instability, and you don't buy on the way down to, especially in this market, until you see 2 candles higher. Now, we are at support. So, I mean, I have no problem buying it back here. You know, right in here. If this gets over right there, I'm out. So let me change this. There. So I'm putting it right here. at that sloping moving average. That's about 8 points. When the markets are this volatile, do not be pissed off if you leave some on the table. You're just trying to make money any way you can, even if it's just scraps at the moment, but that's what you do. As you see, I don't see the reason to get out yet. Now, if you want to go to a tick chart, let's go to a tick chart. Will that get you stopped out faster? Now, keep in mind, I wouldn't be surprised to see this have a snapback to here and then back down. So just keep that in mind. So yeah, it adds up. Now, you're sort of futzing around. I'm probably gonna, like I said, you got to be unemotional about this. See how the candle is higher than 2 previous? I'm changing it. I'm gonna get stopped. There you go. How much was that worth? Like I said, what are you doing? You're shorting when the candle was lower than 2 previous. You're covering when the candle is higher than 2 previous. I mean, that's what the arrows are for. So when you go into this, and a lot of you are actually doing these trades, there you go. You shorted here, 57.83. You covered at 57.57. So, and keep in mind that if you shorted right here on this little break, which did indeed look like a bear flag, you didn't have a lot of reasons to get out till here. Did you have a candle that was higher than 2 previous? No. Did you hear? Yeah. So you're trying to be disciplined. That's it. No more, no less. So, and you started doing real. See, this is what I'm seeing a lot of people doing paper trades and getting the techniques, and then they're doing real trades. So I see 2 or 3 of you have actually done this trade. So now would I buy? No, where would you buy? So let's, and by the way, I just got to show paper trades. Go and check this out. Look how much I made trading 500 lots. Look at that, 200,000 paper trades. But you start doing the 1 lots and it makes a lot more sense. You're not showing the greed factor, you're showing the technique. That's why the other ones I didn't even show, because that just seems ridiculous. Now, where do you buy? If you're going to buy, number 1, you better have a 15-minute chart at support. So yesterday I had a 15-minute chart at support. Then you look for the reversal candle on a shorter term basis. So do you buy here? No, you don't buy on the way down. Do you buy when this range is broken? Sure you can. See that? How about here? Well, to me, the back test of the range wasn't bad. So if you go to a shorter term chart, a 5-minute, was there a place to mess with it yesterday? Oh, let me show you. So you go into here. Where yesterday would you buy it? Does everybody see this? Heck yeah, you could buy it there. You buy on the way up. If you want to be in this business in the long term, you buy on the way up. You could even buy right here when the candle got higher, but you had a lot of schmutz in this area. In fact, right here, I went to lunch. I hardly ever go to lunch, but I went to lunch. You buy on the way up, you short on the way down. That's how we do it. And like I said, you're probably going back down. Look at that. So, I mean, you see what's going on. So, do you buy now? No. You don't even think of buying with this longer term chart looking so bad. Now, you might be like, well, why did you cover? Well, I covered because it's at support. That's all. No more, no less. Theoretically, all right, I got another one for you. Do you mess with the NASDAQ? Remember, I told you the ES and the NASDAQ are underperforming the Russell. So if the Russell goes down, which has been your big tell, then these are going to go down even more. I haven't messed with this yet. There. All right. So what do you do now in the NASDAQ? Well, number one, you look at the big picture on a daily. Where's support? There's your support. Where's the ES support? We talked about this. Remember those lines I showed you earlier? Here's your support. Does that mean to buy at support? Absolutely not. At these areas, you can, well, on the way down, usually you fill gaps. But you don't buy here. You buy when you see the reversal candles. Reversal candle, reversal candle. Now you got to worry about this. Heck, I am. If this doesn't hold, this is a big old bear flag right here. And it goes down another 100. So just keep that in mind in there. Very impressive sell-off. So that's what I'm watching. Now, you might say, yeah, but there might be tariff news. Heck, there already was. Today, you got to know what to key off of. What you got to key off of is the growth-oriented refusing to go up, the possible bear flags. We went over yesterday a special session that one of my loyal subscribers asked me to do on what do you do pre-market. And pre-market, you're watching that bear flag. Pre-market, you're watching world markets. So does this ever matter? It does now. It didn't matter for years. But when you have this violent a reaction, yeah, you got to respect it. So when you have an uppie like this, yeah, you want to buy the U.S. markets. It's showing a risk on. When you see this, you're seeing risk off. So definitely there are some days where world markets matter more than others. There's some times when the Bitcoin matters more than others. Overall, I use growth because right now the headlines, yeah, it's like they listen to me. The headlines were that people are worried about growth. Well, if the growth indexes are going down, then why should the ES go up, especially when so many stocks within it look like bear flags? So I hope that helps. And like I said, what would be the lowest time frame? 1 minute chart. I wouldn't even think when it's this volatile to use a 15-minute. For a swing trade when there's so much instability, I guess you could look at the 15, but look at this chart. Look at the big picture. It looks terrible. So I would not even think of buying. If I did, I got to use a 1 minute or a 2 minute or a 5 minute, and do any of them look good? No. And that's the problem. None of them look good. So that's the problem. So I like to look at multiple time frames. They all look terrible. Now, I wouldn't be surprised to see the MACD get oversold, this futz around here for the next hour or two, get this back up here, form a bear flag, and then have enough ammunition. But I took our profit. I took the $1,300 profit. So, but I'm telling you, Casey, the first thing you should be asking, what time frame do I use to short at resistance? Every single site I see wants to know where to buy at support. You should look at where to short at resistance in this environment. Not all the time, in this environment. So I'm just telling you, there's a time and a place to play it that way. Do you buy this on the way down? No. So, I mean, there's a time and a place to play it on the upside. If you go to an hourly chart, is this in a bull market or a bear market? A bear market. Is this selling off at support? Yeah, in an uptrend. Now it's in a downtrend. So, like I said, I took my profit in the ES. If the Russell rallies, so in answer your question, if you want to use a 5-minute chart on the thing that made it go down, like the Russell, in the 5-minute chart, you're going to see it present itself like this. It's going to present itself by the moving averages are going to start flattening out. So even with that rally, it came back to back test. So the moving averages start flattening. That's what you're going to look for. At least that's what we're going to look for. Now, chart patterns mastery, that Apple butterfly, we're still in. So it's $1.67. We did it for $1.50. But you got to guard right now. I'm just telling you, we got to guard just in case. And that's the other thing we talked about. Let's see. I don't have a lot of time, but I'll show you. A lot of people talked about selling strangles today because, the market's so crazy. Probably the volatility's in the sky. I want to show you an eye opener. Do you see the expected move for tomorrow? 16.9. And you know that Meta's been doing that. So the realized volatility is really high. It's 20 today, it's moved. Go and check last Thursday night. 17. Nobody is respecting this sell-off. The expected move for tomorrow should have been 25. Nobody is respecting the instability. So just keep that in mind. Nobody's respecting it. Now, I covered. Remember that. I already covered. And we covered because it got oversold at support. Remember that. That's all it is. Oversold at support. And also, what made markets go down today? The Bund. And what did the Bund do on the close? It rallied. Rallied a point. So that could have a bounce. It's still unstable. But that's why I think you're getting somewhat of a bounce. So, but getting back to it about Meta, this is why we didn't sell a strangle, like sell a call and sell a put, because the expected move for tomorrow is still low relative to the stock movement. So just keep that in mind. In fact, ridiculously low, compared to the stock movement. This is last Thursday night. This is this time. That is not respecting the realized volatility. So just want to show you that. Now, could you buy on the way down? Well, sure you could, but you're going against the grain. That's all I'm telling you. There's a time and a place to play it on the upside. Now, if you want to play ultra short term, there's a trend line break. Do you see it? So you're buying on the way up. The problem is you have multiple layers of resistance on the way up, but at least you're buying here. Are you buying the bottom? Absolutely not. But you're buying at least a little break to the upside. A little, not a lot. Now, the interesting thing is, this is where you trade futures. And the reason is, let's just go over the SPX right now. Like I said, one of the biggest mistakes I see is buying zero DTE premium or buying with 1 day to go in a stock on a downtrend of buying a call. So, because they expire worthless. I understand buying an IBM on the way down, you'll eventually probably make money like Warren Buffett. But I want to show you what we're talking about. Here's another example of what I like to show. We're going to go to a two time frame. And what we're going to do, you don't need the MACD. Let me see if I can do it without the MACD. Well, I'll just show you. So on the right, we're going to show this X MACD. And this is why oversold at support is dangerous of buying a put. So now, do I think this is going lower later? Absolutely. But you just had a 7-point pop. What did the out of the money SPX puts do? Now, remember, it's not much of a pop. SPX has popped about 7 points. Where are the 5,700 puts for today? Let's go and look. Now, do I think they're going lower later? Yeah, I mean, I think the S&P, sure. But where are the 5,700 puts? They're 6. See that? There, that's what I want to show you. This bounced all of 4 points, and this went down 30%. Isn't that amazing? Now, do I think it's going higher? Yeah, eventually, but it's still 40 points out of the money. So I just want to show you that. I think it's fascinating. Now, I'll tell you, so far, and by the way, here's another trader myth that oversold means you're going up. Oversold determined by the 50 moving average. Oversold in an uptrend, in a downtrend, does not mean you're going up. Oversold in an uptrend, sure. Here's the 50. It's sloping straight up, and you got oversold. Those were great buys. You look for the buy signal. Remember, you're looking for the buy signal, the reversal candle, when you're oversold on a daily chart. Now you got to be careful about some real crack today. So just keep that in mind. So I'm glad you made money in the ES. Like I said, this is what I'm watching on the close. Number one, this could be a big old bear flag still. I know everybody only wants to buy, but that could be a big bear flag. If that's true, it's going down another 100 points. So you might be like, well, why don't you go and short a future again? I want to see how we work off the oversold 15-minute chart. But right now, this looks ugly. In fact, it looks like it's about to break. So Chart Patterns Master, I'm going to jump on live in there. So take care, everyone. Thanks for being with me. Talk to you later.